All right. Hello, everybody. Welcome back to another episode of the Market Close. It is Friday, August 1st. And folks, we have officially, well, it looks like in the next 15 minutes it will be official, entered into our first red day on the S&P 500 of at least 1%. First movement of 1% in general, up or down, but in this case it is down in the past 25 days. 1.6% on the S&P. We're going to need a lot of work in the next 14 minutes to get this thing to get back below 1.6% or even below 1%. And unfortunately, we got some pain. So Robinhood did have a recovery from 93 to 104 at one point. Now back to 100. Still not horrible, but obviously down from the highs of the day. Palantir 154 down 2%. Tessie 297 to 308. Now back to 303. Nvidia tried to get back up to 176. Now back at 173, and then you got the S&P 500 down about 1.6%. It's been a pretty crappy day across the board. It is not as bad as it was in the first 30 minutes of the market open, but still a little bit of a gut punch going down about 1.6% of the day. Now, the headline news, obviously the payroll numbers and the revision of the payroll numbers is what has caused all the pain today in regards to the equity markets, because now we're thinking, hey, wait a second, not only is Jerome Powell late, we have some issues because we're not having a labor market that is strong. But Trump just tweeted this about 20 minutes ago, and this is also kind of causing some pain as well. I was just informed by the country's job numbers are being produced by a Biden appointee, Dr. Erica McEntaffer, the commissioner of the labor statistics at the BLS, who faked the job numbers before the election to try and boost Kamala's chances of victory. This is the same BLS that overstated the jobs growth in March of 2024 by approximately 818,000 jobs. He is correct about that. And then again, right before the 2024 presidential election in August and September by 112,000. These were records. No one can be that wrong. We need accurate job numbers. I have directed my team to fire this Biden political appointee immediately. She will be replaced with someone much more competent and qualified. Important numbers like this must be fair and accurate. They can't be manipulated for a political purpose. And then he goes on to say the economy is booming and we need to have more of a efficient way to collect our numbers. Look, he's not wrong that we need to find a more efficient way to collect the numbers. And I went on a rant about that in the morning. I can't believe that in the world's most technological economy, we still have these misunderstandings, if you even want to call it that, about the job data. However, he's essentially taking no responsibility for the crappy jobs that we've had over the past 3 months. And he's saying that they're cooking the books against him and they cooked the books for Biden, like for him. Now, maybe he is right that the jobs data in 2024 was not the most accurate. And literally they revised it by 818,000. So yes, it wasn't the most accurate. But remember, they revised it by 818,000. And they revised it by 818,000 while Biden was president. It's not like Biden wasn't president, right? So the fact that they did that when Biden was president means that, at the end of the day, they still revised it to the downside when he was president. And it also does not take away the argument that, wait a second, we did not add jobs for the past 3 months. Or if we did, we only added 20,000 jobs. So essentially, right, this is kind of what I was talking about in the morning as well, that there's an issue with Trump's ego when it comes to this. Ironically, you want low job numbers because at least it's something of a catalyst. Obviously, it's not good for people to get fired and to be unemployed, but there needs to be some type of catalyst for Powell to cut. And if it's not going to be tariffs and it's not going to be Trump tweeting every day that Powell's too late, then a weak labor market will do it. The problem is Trump has to admit we have a weak labor market in order for that catalyst to be more significant. And he's not going to do that because Trump has an ego. And because Trump has an ego, he's not going to make the argument that it's his fault for the labor market being weak. He's going to blame it on a Biden appointee. Which, look, I'm not saying that Biden appointee is the perfect commissioner of the BLS, because obviously the past 2 years have been really weird with all these revisions of data, and something weird is going on in the BLS, and someone has to be accountable for that. But that doesn't mean the past 3 months are because of that BLS commissioner, because what about the past 4 months when Trump was in office before the past 3 months when jobs were great? Is it the same BLS commissioner's fault? No, right? He wasn't blaming the commissioner then, so why is he blaming the commissioner now? You got a lot of people that are not really liking this argument by Trump, and obviously the markets took a little bit of a dip once Trump put that out, because it just doesn't necessarily seem like that's the right way to conceptualize how the BLS is operating. By the way, you also had another Federal Reserve Governor, Kugler, that is part of the people that make a decision on the rate cuts. They are resigning. Now, I read through their I read through their resignation. It doesn't seem like there's any major reason other than they want to go be a professor at Georgetown again. I mean, I'm not her, so I don't know why she would want to leave the Fed to go be a professor, but there wasn't any like, I hate Trump or anything like that inside of her reasoning, at least not that I could have seen, but that is another little bit of a shock that we got in the past 20 minutes. Now, this was one of the biggest hawks. She has historically been a bit anti-rate cut, and she has not necessarily been a dove on the Fed committee. So technically her leaving means that you will get someone to replace her. That probably will be a bit more dovish. That doesn't necessarily mean we're going to get a rate cut because obviously the committee in general is more towards the side of being restrictive. But with the news that we got this morning, it is very likely, almost, 91% likely that on September 17th, we are going to get this rate cut because now they have no choice. So that is what has happened today. Obviously, it is very, very weird to see a lot of this play out. Again, the red is not really that concerning to me. We also had a really good July. You probably have to give a little bit of back of that. Tom Lee gave his take just now. He said equities are down 2%, and the best explanation is the stock market needs to digest the gains of 28% since April lows. Every dip has been shallow except for the tariff Armageddon, which he's right about. Today's dip, if you want to even call it that, it's not necessarily a dip, right? It is rather shallow, at least for now. So to us, aka Fundstrat, this is a normal dip, and essentially he's saying to buy the dip. Again, the red is not really that big of an issue today. It's annoying, it's ugly, it hurts everyone's portfolios. What the bigger issue is around the BLS, how they calculate this jobs data, what's happening in the context of jobs data, why it got so off, and then Trump not acknowledging that there's problems in the economy. I mean, like there's just no way to deny it, that there is some structural problem in the economy, at least to an extent, right? Not saying it's the end of like the bull market or anything, but there is some structural problem for us to only be adding 20,000 jobs a month. There's probably some level of labor market weakness. That's why Federal Reserve rate probabilities went from 30% to 90% today. Trump's not acknowledging that. He's saying they cooked the books, whoever's in charge of the BLS, to the downside, and they cooked it to the upside for Biden, which ignores the fact that they announced the upside cooking for Biden during Biden's presidency, number one. And number two, the past 4 months, before the past 3 months, we had good job numbers. Are those cooked as well, right? It just opens up Pandora's box of like, how do we analyze this? And the market doesn't necessarily know exactly what the answer to that question is. And as a result, you got a red day. Let me know in the chat if anyone bought or sold. I bought some more Grab. That's pretty much it. Bought 500 shares more Grab. Didn't do anything else. And that was it for me today. But let me know if anyone went shopping, if you sold anything, took some profits. I had a couple friends who bought Hood at 11. Today they sold. They said, you know what? I'd rather protect my capital today. Although I think it's a generational company, I just want to make sure I can reallocate to different positions. I think that's fair. You know, obviously you have to look at your time horizon, your own personal investment horizon. But yeah, let me know what people did in the chat. Here is the Dean Evaluations from NYU. Let's get his take on what happened with these job numbers today.
Very strong run we've had over, say, 3 or 4 months. Did the market as a whole have a valuation problem, or did it really, change the risk reward looking forward?
I think the market has been bimodal. The first part of the year, I think the market built in expectations that things would get a lot worse. Then in the last 3 months, it almost seemed to switch and go in the other direction. The truth, I think, lies somewhere in the middle. And I think we're going to find out over the next 2 or 3 months where that steady state is. But I do think markets got a little overstretched over the last 3 months, expecting the best of things.
All right. And were there parts of the market that you felt as if just got either, overdone or were left behind? But, many of us keep talking about how it's in some respects an unbalanced market, just in terms of the massing of market cap in one area and in the kind of secular growth parts of this market. And yet those secular growth parts of the market is where all of the upward earnings expectations have been as well.
I mean, if you look through April 8th, the Mag 7 stocks lost almost, 20% of their market cap, trillions of dollars in market cap. What's happened in the last 3 months is not only have they recovered that loss, but they've added another couple of trillion. The key word is trillion. I mean, we're adding magnitudes of value to these stocks that I don't think they can sustain given the economy, given the company's own capacity to generate earnings and cash flows. So that's what I mean by overstretched. I think that, these are great companies, but they're not as great as the market thinks they are.
Now, I disagree with that. The earnings have been phenomenal. So the professor right here, the Dean Evaluations, he's been bearish the Mag 7 for the past year now, and his argument has been valuation. Again, I think valuation methodologies are changing as the market starts to recognize that there are massive opportunities in the earnings growth potential of these names. So I disagree with that. But the one point he does have is that if the economy really does take a meaningful decline, which no one really knows if that's going to happen yet. Today's data is just either an appetizer to something worse, or it's kind of a one-off anomaly in terms of how we're thinking of the labor market. That will determine how the Mag 7 are judged in the context of the macroeconomy. Apple right here down 2.4%. That was good earnings. I don't know why Apple's getting hit that bad. But the market's taking Apple down. NVIDIA right here down 2%. Probably algos as well, taking down all the Mag 7. Figma still green, 121. The fact that Figma's holding 121 is not that bad. UNH as well, just disgusting, 236. I mean, this one is getting demolished. It's getting pretty demolished. Down right here about 5% of the day. Bitcoin as well. So you got things that are theoretically undervalued like a UNH, and then you got things that are super risk on like a Bitcoin at 113. I mean, we haven't seen 113 in a minute. We were at 123 2 weeks ago. So this one as well getting hit just across the board. I mean, if you're an Open Door and Figma, full port, congrats. But everything else, HIMS down 5%, Meta down 3%, Microsoft down 2%. Everything is taking a hit. Now, my mom decided to become a hedge fund manager today. And she honestly, she did some really good portfolio management. So my mom has 14 contracts on August 15th, covered calls for Hood at 120. At the bottom, at 93, she closed those covered calls, meaning she bought them back for an 88% gain, because in her mind, and I didn't tell her to do any of this, she did this all on her own. And then she told me about it. There was no point to wait 2 weeks for another $600, especially when Hood had fallen down that much, which means the covered calls, you're up on the covered calls, right? When the stock falls, because the premium on the call goes down. So when you buy back the call, you're paying a less amount of premium. And then when Robinhood got back to 103, she sold 107 covered calls for today, 14 contracts on 1,400 shares, and she collected another $250, 12 cents a contract. And I'm listening to this and I'm like, I've created a monster. I have created a monster. And then she said, you know what? Because this is like my first kind of intraday move, I'm buying a new purse with this $250. And I lost. I couldn't stop laughing. That was hilarious. So she's learning the markets, and she got really lucky with the timing today, but it wasn't even luck. You know, she's been observing Robinhood for a long time. At 93, she felt, okay, I'm up a lot on the calls. I should close them. Reasonable thing to do. Why would you wait 2 weeks for another $600? And then when Robinhood pumped, she's like, wait a second, at 103, it's not going back to 107 today in 3 hours. I'm selling these calls to whatever gamblers want to give me $12 a contract. And given she had 14 contracts, you know, she made a nice little $250. So there you go. She was much more active in the market than me today, but she was able to gain some momentum. And that type of portfolio management, I actually think, is not like day trading or anything. It's just like closing and opening positions, and you're using the probabilities of deltas that are on your side. The question is just like, you know, can you close it or open at the right time? Because if she tried to do this when Robinhood was 103, it wouldn't have worked. She had to do it when Hood was down, and then had to sell the call when Hood was up to kind of play the alpha within the spread of the volatility. Amazon right here, nasty day, down 8%. We got 2 minutes into the market closes. Chipotle's down 1%. Reddit holding 17%. The earnings were that good that Reddit, with a high beta, just sort of perception in the market, still was able to hold on. Big Bear AI up about 1%. Duolingo down 2%. SoFi down 6%. Cloudflare down 3.5%. Bitmine, nasty day, down 9%. Rigetti, Ola Quantum got hit. D-Wave down 2.4 or down 4.7. Rocket Lab down 2.3. We got about 1 minute left. The S&P 500 looks like we are going to close down 1.6% for the first time in over a month. I did text Steve. He should be able to join the stream for a little bit. So probably in about 20, 30 minutes, we'll get him on. And then we'll talk about a lot of the other macro stories we have. And we'll do a year-to-date update. Because if we do a year-to-date update on the good days, we got to do a year-to-date update on the bad days. And we'll see how everyone's portfolio has ended up for today. All right, folks, here we go. Friday, August 1st. Bit of an ugly day, but it is what it is. 4 p.m. The stock market is now closed. All right, we are done with the first bloody day of August. S&P goes down 1.64%. S&P goes down 1.64%. Probably a day that we needed in terms of giving back some of the pain or some of the gains to, deal with some of the pain from getting those gains, but also a bit of an ugly day. By the way, real quick, before we go through all the numbers on how the market ended, this piece of news, I don't even know what to make of this, but Trump said, I'm issuing nuclear submarines to now get positioned in case Russia, who the former president of Russia said some things that he says are foolish and inflammatory. And so he says, I have ordered 2 nuclear submarines to be positioned in the appropriate regions just in case these foolish and inflammatory statements are more than just that. The market kind of dipped when he said this. It was around 1 p.m. Eastern. But ultimately, I think the market was just like, we don't even know what to do with this news. Like, what, nuclear war? Really? Like, we're having a nuclear... So I don't think the market took it that seriously, but that is something that came out today in terms of different news. NVIDIA right here ended the day 173. That's down about 2.3%. Robinhood ended below 100, down 3%. Open Door right here up 14% of the day. MicroStrategy down 9%. This one got hit bad because of Bitcoin. Venture Global down 2%. Amazon down 8.2%. I don't know when the last time Amazon had a negative 8% day. I think it was back in April. So it's a pretty ugly day for Amazon. SoFi right here down 6%. Duolingo down 2%. Cloudflare down 3.65% as well. And that one is getting hit. Do you guys hear a dog? Dude, let me close There's this. Okay, you guys can hear. Let me close the window real quick. There's a dog barking outside. Did he stop? Okay, he stopped. All right, cool. I don't know why he was. The neighbor's dog usually. Okay, never mind. He's still barking. Let me close the window. Bro, why is he so upset today? They have a good dog. Their dog never barks, like ever. I'm surprised you guys even heard that, but their dog usually doesn't bark like that. All right. Lululemon down 4%. That one's down. Google down 2%. Novo, that was up a little bit. And then Palantir down 2.5% as well on the day. All right. Year to date. So what do we got? What do we got in the chat? I am up 80% year to date. It was 95 last Friday. So that one is down. No, I did not close my window with a zipper. You just close the window normally. Just how'd you guys? You heard a zipper close? No, we didn't zip the window. How did you guys hear a zipper? No, just regular window goes up and down. Yeah, who zips a window? What are you talking about? Like, sounds like my window zips down. No, it's a regular window. It sounded like a zipper. No, it's a regular window. It's there's no zippers attached to it. All right, 80% for me. 80%. So. At the worst today, it was down 94,000. It ended down 55. So we recovered a little bit of it, but still obviously a very ugly day. Most of the stuff that I'm seeing right here is still well above up 30, 40% year to date. So although it's been a little ugly, I do not live in a brick tent. People are still doing okay. 621 on the S&P again. United just, I don't know why it took another nosedive today. Where was Oscar? Oscar, did that get hit? Oscar, yeah, down 4%. And then Lemonade. Lemonade is wow, Lemonade below 40, that down 4%. So all the insurance ones got hit. And then big tech as well. Where was AMD? Is that below 170? AMD still holding above 170. Not too bad. But AMD is just above it at 171. Yeah, pretty much everyone. Curtis says up 45%. It was 52% on Tuesday. Greg, 16. Profula, 37. I mean, everyone lost about 10 to 15%, but still, that's not horrible. I guess my window does sound like there's a zipper on it, but there's no zipper. Ask the dog about Chewy stock. That's hilarious. Where is that stock? Remember Roaring Kitty bought that thing? $35.92, down 2% today. Has that one at all performed this year? Chewy year to date up 6%. That was a bit of a meme stock last year as well. Matt says I'm down 100% because my port is at 0. That's fair. That is fair. All right, so it was an ugly day, folks. It was an ugly day. It was a very, very ugly day. It was the first ugly day that we all had to deal with as investors. We got a bunch of news stories and headlines that we'll talk about in a bit. Steve should be joining as well. But in general, look, my kind of core take today has been, and I was talking about this with my mom actually as well. These are the days that build character. These are the days that really do build character. At the end of the day, it's really nice when everything's green and going up and you're making a lot of money. But on the red days, are you cursing people out? Are you taking anger out on your loved ones? Are you so annoyed you can't function? Or are you humble enough to realize in order to get the gains, you have to go through the pain? When the markets go up, you aren't the smartest. When the markets go down, you're not the dumbest. and that great companies will always be subject to the whims of different algos. So I think there's a reason why Buffett, Ackman, and Drux are very humble when they talk, because they know how hard it is to win. And they know when they win, they can also lose, and how much they have to go through in order to win. And it just builds your character as an investor in the first place. And I know more of the seasoned investors that are listening have, dealt with this many times, and you've been through 2008 and 2020, and some of you from 1987. So like it's the name of the game. But this is the greatest economy in the world. These are the greatest earnings in the world that we've ever seen. We have the greatest tailwinds we've ever seen via AI. And so for everyone who's been in the market for less than 10 years like myself, this is just another lesson of dealing with some of the red days. And to be honest, down 1% on the S&P is nothing compared to what we went through in April. In April, we went down 30%. So it really shouldn't be something that is that new to people, especially after we got that massive gain for the month of July. If you personalize losses, you don't know how to trade. 100%. 100%. It is what it is. It happens, and it's how you navigate it that matters. And honestly, closing the portfolio, not watching the stream, right? I know everyone loves being part of the community, but sometimes if you just don't want to hear about the markets, if it's mentally exhausting, and just going to do something, going for a walk, doing something else that you like, a hobby, I mean, like, that's also part of the strategy of navigating it mentally, because you never want your mental to get to such a bad point where you're actually thinking about bad things simply because of your portfolio going down. It is just one of the things that you have to deal with as you become a seasoned investor, and as all of us try to become better seasoned investors. Rocket Lab right here, down about 2.4%. Netflix was flat on the day. Costco was actually green 1.5. Lululemon was down 4% on the day. All right, let's talk a little bit about some of the other headlines and stories that we got. Here's a big one that happened today. This one, again, proving that AI is very, very real. Folks, OpenAI, we missed this in the morning. I didn't even see it, but it is official. $300 billion market cap, or rather, I should say valuation. $300 billion valuation is what you got on OpenAI. ARR is now $13 billion, which is quite incredible. They raised $8 billion without SoftBank. Remember, SoftBank got rid of the $40 billion that they were going to put in. So I don't know what other investors they got, but apparently the round was 5 times oversubscribed. So they didn't really need SoftBank, and they were able to do what they needed to do. ARR, $13 billion, is up from $10 billion that was projected in June. They should be surpassing $20 billion by the end of the year. And business users who pay for ChatGPT has reached 5 million, up from 3 million a few months ago. Also, the information reported that they have 700 million weekly active users. So from that perspective, I mean, it's just really hard to deny the momentum of OpenAI and ChatGPT. Obviously, they're not profitable yet. Eventually, they should be. And as a result, they are gaining momentum. And this is why NVIDIA has a bid, AMD has a bid, Dell, SMCI, all these semiconductors have a bid, because OpenAI is one of the major companies that's really growing and that needs a lot of compute in order to grow. Let's get an update right here from United Health, and then we'll keep going from there as well.
A new CFO just yesterday is the second major leadership change since May. Meantime, Coinbase has struggled, particularly after reporting a revenue miss in its earnings report yesterday. The crypto exchange saw lower than expected trading volumes, subscription revenues also lower, and transaction revenues lower in the prior quarter. It's now also the worst week of the year for the stock, trading about 19% lower on the week. And then lastly, UPS also falling almost 19% this week after it reported mixed quarterly results, earnings per share missing the mark, and a decline in average daily domestic package volume also hitting shares. The shipping giant warned that economic visibility was still too poor to provide guidance. So they opted out of guiding, and that's why you're seeing the stock hit so badly this week. Mike?
So UPS, UNH, all of these getting hit. Bitcoin, by the way, still going down. 113,241 is what you're seeing on that. So that one obviously getting wrecked as we get into the end of the day. Let me just get back to our take on UNH, because I think that cut off, and then we'll move on with some other stories.
Yeah, I want to start with the big movers this week, and that would be United Health, down about 16% on the week, trading at levels we just haven't seen in 5 years after naming a new CFO just yesterday. It's the second major leadership change since May. Meantime, Coinbase is...
So they didn't even have any analysis. They just said, hey, UNH is down 16%. I didn't hear any reason for it. I don't know if you guys heard a reason. They just announced that UNH is down 16%. I mean, look, it's getting to pretty stupid valuation levels, trading at 8 times free cash flow. But the narrative, I guess, from the DOJ investigation is what's really hurting it. 237 right here on UNH. Grab after hours is at 480, ended down about 2% on the day. S&P 500 up a little bit after hours, and then AMD as well, flat after hours, but red. Dude, Coinbase was also just disgusting today. Their Q2 was not a good quarter. This thing, wow, 16% in a day. They said UNH was down 16% in a week. Coinbase down 16% in a day. They threw this bad boy into the S&P 500, which is another reason, the volatility of the S&P 500 is also going to be aggressive with Coinbase. By the way, I confirmed Paramount should be getting added or should be getting deleted from the S&P 500 as they get acquired on August 7th. So, I mean, I'm pretty sure August 7th, the spot opens up. If the acquisition goes through, which the regulators have already confirmed it, then next week, folks, at 5:15 p.m., we get another shot to see if Hoodie can get in after this quarter. If they don't let him in, the only acceptable replacement, in my opinion, would be AppLovin, because they do have a bigger market cap than Hood. But it would be a bit aggressive to not put Hoodie in another time. So we're going to have to see. We're going to have to see. All right, let's look at some macro data. Let's look at some other macro data and some charts in terms of what is going on. So let's take a look at this, which is also part of some of the reasoning for why the markets got hit today. Options retail market share as a percentage of the total options that are traded across the entire market are at all-time highs. So retail investor shares of the options market has hit a record 21%. 1 out of every 5 options in the derivatives market are from retail investors. The percentage has risen by 5 percentage points since April alone. It also now exceeds the 2021 meme stock frenzy by 4 percentage points. Meanwhile, retail trading activity now accounts for 20% of total stock market value or volume. 1 out of every 5 stocks orders that come through is from a retail investor, the highest level in 4 years, according to Citadel. And call options now reflect 68% of total market volume, the highest since 2021. This is aggressive, and this is also in tandem with the chart we looked at last week around leverage, which is now at all-time highs in the stock market as well. Again, leverage, what does that mean? That means collateralizing your assets in your brokerage to borrow against them. When you borrow against them, you have money at a very cheap rate because they're collateralized. It's not a personal loan. And then you can use that money to go do something. And what can you go do? Well, you can go buy stuff. You can go buy more stocks. And if those stocks go up, you get more margin. So we do have margin at record levels. And now you have option trading at record levels. Another sort of form of leverage is what you have with options. It's just a lot that's going back and forth inside of this market. And when you have a crappy job number like we get today, obviously that's not a good thing. And that could also be hurting when it comes to sort of the broader market perception. At the same time, you have leverage at an all-time high. You have retail market participation at an all-time high. And then you have this at a pretty high rate as well. U.S. auto loan delinquency rates continue to surge. Subprime auto loan delinquency rates just crossed above 5% for the first time in history. Since 2022, the 60-day delinquency rate for subprime auto loans has more than doubled. Delinquency rates are now above the peak levels recorded in 2008 and 2020. Furthermore, prime auto loan 60-day delinquencies have risen to their highest level in 14 years, all while the share of auto loan balances of at least 90 days past due, meaning you haven't paid your loans for 3 months, hit 5% in Q1 2025, in line with the 2020 pandemic when people lost their jobs and could not afford to make their car payments. That's kind of some of the bearish news that we got in the market. Does that mean you sell all your stocks and go to cash? No, at least that's not how I interpret it. That's just another piece of the puzzle in terms of what's happening in the market. But, there are different signs of an economy that potentially is weakening. Figma up a little bit after hours, and that cannot be ignored. And one of the reasons the economy is a bit weak, Figma, up 2% after hours, now we know for sure, is because there's not that many jobs that are being added. And so if you don't have a job, it's kind of hard to make your car payment. And so some of the data is starting to become more synonymous and make more sense because of this revision that we got. Now, I don't think the job stuff is the end of the world because, again, in 2024, we had that 818,000 job report that was eliminated as well, or that showed that these jobs were taken away and revised, and the market was able to look past that. It's almost very similar to what happened last year. We topped out in July last year, mid-July instead of end of July, at least that local top. And then August, we got a really crappy non-farm payrolls report. Market tanked, and then you had the yen carry trade. Exactly what's happening right now. We got a revision after a good July. We don't have this kind of yen carry trade catalyst, but it's very similar to 2024. And guess what J. Powell did in September of 2024? He cut rates by 50 bips. And it would not be that surprising to me if that's the route they go again this time, because they end up realizing that maybe they were a little bit too late, which is not crazy to imagine that as the way it ends up playing out. So pretty wild market. Let's get a little bit more coverage on this jobs data and what this means. This to me is Steve's long lost cousin, aka his doppelganger. He doesn't see the comparison, but I do. This is basically Steve on CNBC. So let's get his take as well.
What tariffs might shake out in this new threat from the president. How are you playing it? What do you expect, let's say, for the next few weeks?
Yeah, I mean, look, this is a big week. We had a lot of big earnings. Earnings look great, like you said. Mag 7 delivered. The rest of the market delivered. We had a great GDP number. Powell comes out sounding fairly hawkish. Everything looks like it's going the way it should. We've got the dollar now back to where it was in April. And to quote Lee Corso, not so fast, right? We're in a situation where, wait a second, we're looking at the labor market. What did the Fed see and what is the market seeing right now? Now, like taking into that consideration, though, we were in a really overbought situation, right? Volatility had come down. If you look at retail buying, retail has been fighting with the kind of the smart money, hedge funds, long only, in the sense that $75 billion has come into the market this quarter. That's at a 22% rate, 75% of which is going into passive. That's having a side-on effect with systematic hedge funds coming in. That's having a side effect with the short squeeze. So we saw meme stocks going up. We saw the most shorted stocks go up pretty dramatically. So we were due for a pullback. This is just the catalyst that's starting to realize that.
Yeah, I mean, the market often, when it's time and when the conditions are right, goes in search of something to kind of create an excuse for what it has to do on the downside. On the other hand, I do think that the jobs number and the revisions may have generated a bigger rethink of just exactly how resilient the broader economy is. And where do you come down on that as to whether this raises alarms or it's just still part of the same muddle through trend?
Look, I think there's a real question with regards to what the actual damage is for tariffs and what it's doing for economic data. I think if you look at Q1 import data, imports were up about 35%. Q2, they were down about 32%. So, we're in a situation where we're seeing a lot of things moving in directions pretty rapidly. So the question is, how much did companies prepare for that, and how much is baked into these earnings that we're seeing, and what does that mean going forward? You're seeing some of this sectorally with regards to autos and airlines not necessarily doing as well, but companies that aren't as impacted by imports doing quite well. I think the real question is, look at Apollo and Carlyle have been talking about this, is that inventory drag, right? You've seen inventories come down fairly dramatically. We've got, a lot coming over from China. What is that going to be priced as? Is this a situation where margins are going to start to compress, or is the consumer going to start to feel it and we're going to start to see inflation come up? So this might be kind of the canary in the coal mine with regards to the fact that companies are starting to tighten their belts. They're not hiring as much, and this might be a lower growth environment than we were expecting.
You mentioned
he really does look like Steve, bro. He really I try to say this guy looks like you, and he's just like he doesn't see it. I'm like, how do you not see it, bro? That's you. That's literally you. Figma right here, up 30%. Figma up 3% after hours. Again, Figma having this type of momentum on a nasty day as well, ending out green, also tells me it's hard to say that the market is completely cooked. I mean, one way you could interpret it is that this is a meme stock and it's cooked. Another way is that, hey, there's a lot of risk appetite that's left and people are not ready to completely get out of this market as well. One fact is that the market never bottoms on a Friday, just like historically, that's never happened. So if there is more pain, we're likely going to experience it next week. And I don't think it's crazy to experience some more pain. Like, it is, this labor market data changes the equation for everything. I mean, as markets evolve and things are rapidly dynamic, you have to pay attention to them, right? This is what we try to do on the show. And when you get new data like that, the data was so bad, Trump said, I'm firing the head of the BLS. That's how bad the data was. Trump doesn't want to, this is almost, this type of analysis is what we've been talking about for a while on the show, which is that Trump has a big ego. That ego cannot be undermined. And for him to say we lost jobs over the past couple months, he has to blame someone else. Now, he is right to say the BLS has a crazy form of data aggregation and that we need to do something about it. 100% right about that. but he's not acknowledging the fact that it's not just the BLS. It's that there's probably some underlying weakness in the economy, unless he's implying we actually did add the 250,000 jobs that they took away today, and the BLS is just saying they've been taken away because they're politically trying to show that Trump is horrible at creating jobs for the economy. Which, if that's the case, why weren't the last 4 months revised along with the past 3 months, right? Why wasn't every month resigned if that was their only motive? So I don't know, dude. It's one of those things where, yes, there's some underlying weakness that we have to address. We're likely going to get the rate cut. The question is, how bad is that weakness? Because if the weakness is actually bad, we're going to see it in earnings. And we have not seen it in earnings yet. We just haven't. Is gold up today? I didn't even look at gold. Wow, gold was up 2% on the day. Looks like people got scared. I didn't look at gold all day. 2% green. Seems like people sold stocks and went into safety, which is gold. I can't look at Microsoft, Amazon, Meta earnings and say that, the job market is the reason why you should sell these stocks. Now, because again, like just Meta, simple example for anyone to understand. Meta makes money on advertising. Advertisers pay money to Meta if they get a return on their ads. They get a return on their ads by people buying their products. If people have enough disposable income to buy stuff, then Meta has enough advertising demand for people to want to advertise to sell that stuff. When you have people lose their disposable income, aka lose their jobs and just in general have a weak economic environment, then Meta's earnings would not be beating by $3 billion on the top line. Amazon would not be beating by $5 billion. By the way, Amazon grew ads the highest level out of every other Mag 7 company that engages in advertising. They grew them at 22% on the top line, and everyone else did not grow as much as that. Meta was the only one that was the closest to being able to grow as much. VIX ended at 20 today, I believe. Let me check the VIX. VIX ended 20.55. VIX was up 22% today. If you had VIX calls today, those did very well. So I mean, look at that. Amazon ads are going better than Meta, Microsoft, Google at all different angles, and it's a Mag 7 company. Market took it down 8% today because they thought AWS was weaker than expected, even though AWS beat. And that is not a sign of an economy that's broken. At least that's not what it feels like when you see those types of numbers. Opendoor is up 6% after hours. Opendoor was up 14% on the day when the S&P fell 1.6%. And now it's up 6% after hours. And Figma's up 2% after hours. I mean, very weird. Very, very weird. Amit, is it safe to say Q2 earnings are pre-tariff impact? Q3 is where we'll see the effects? Possibly. Q2 had 1 month of tariff impacts. So there is some level of tariff demand, and CEOs have been talking about it as well. But obviously Q3, we'll have a lot more tariffs, and also we will have these new instituted tariffs that Trump put on last night. Which how long will they stay in place? No one knows, but that is also another reason the markets could be factoring in maybe a little bit of a weaker earnings on Q3 if Switzerland has to pay, or companies that are buying from Switzerland have to pay 39%. So that's what we got. Oh, that's number 1.1 trillion. All right. 1.1 trillion wiped out from the US stock market today. Dude, in April, it was 9 trillion. So it's 1/9 of how bad it was in April. By the way, fear and greed, folks, we are back to neutral. On 50. It was 78 2 weeks ago. What do I think of NVDY? NVDY is a synthetic covered call yield max ETF. You should buy it if you want the dividends, aka the premiums from covered calls that they sell on NVIDIA. You should also understand how yield max ETFs work. We talked about it a lot in the past. I don't own it, but like if you did own it, then it's just basically paying someone else to do the covered calls on NVIDIA versus you doing it yourself. So as long as you think NVIDIA is volatile and NVIDIA will go up over time, then it's not the worst thing to buy. However, these yield max ETFs, the reason why PLTY and HOOY, the Palantir Hood ones, are aggressive to buy is because those stocks are trading at all-time highs. So if there's any weakness in the underlying, the yield maxes will get wrecked. And that's why, you just got to be careful. But on MSTY, I bought it at 21. It's at 17. MSTR kind of pretty much the same price. As long as MSTR doesn't go like below 320, I think it's okay. But if it stays within a range, then you should be catching at least a decent price. But yeah, if you buy the yield max, you just got to make sure the underlying has strength, because if it has any weakness, the yield max will get wrecked and the dividend will not matter as much at that point. Yes, systematic CCs are not the same as opportunistic covered calls as well. That is correct. I would just look up yield max ETFs and how they work. There's a lot of videos on YouTube about it. Steve and I have talked about it a long time. Steve on Seeking Alpha has a ton of articles on them, so you can read up on them, but there's a specific way that they implement covered calls. It's not exactly owning the underlying stock, and that's what generates those premiums. UNH down a little bit after hours. AMD's up a little bit. Chewy's up 2%. NVIDIA still down a little bit. And then MicroStrategy as well. Nasty day. That one is down. Yes, I did buy more Grab. I got 500 shares. I think at 483, 482, 43, around that price. And yeah, I did buy the dip. My cat's name is Misty. I love it. And there you go. Cat's name is Misty. Dude, a lot of you guys bought Grab today. When I asked what dip did you buy, a ton of you guys bought Grab. So we're all on this journey together. I mean, so speaking of it real quick, I mean, I will link this in the chat. Dude, every report I'm seeing from the analysts are like bullish. You had a ton of these analysts that came out today. I showed you guys Benchmark in the morning. This was another one who their price target is still around that 560 range. But Bernstein, I'm not going to read the whole paragraph, but they were just like, we love it. We absolutely love it. They didn't increase their price target that much. They probably want to see a little bit more inflection in the margins to really increase the price target. But I'll put this in the chat for anyone who wants to read it. I will do a video on Grab this weekend, and we'll do a lot more of my thoughts on earnings in video format so people can read it. People can listen to it. But every analyst absolutely freaking love the earnings. And I mean, this stock should not be at 480. This stock is now trading at, what's the market cap on this thing? They have $8 billion in cash. Market cap is what? By the way, I did buy something else today that I will tell you guys about. Market cap is 19.8. All right, so 8 divided by 19.8. It's trading at 40% cash. So if we take the stock price, that means every share you buy, $1.92 of that share, you are buying cash, which means you are paying for the business that is doing $3.4 billion in revenue and growing EBITDA 50%, $2.88. I mean, you know, to me, it's risk reward is there, but ultimately the market will have to recognize it as well. And, you know, the algorithmic tendencies of the market to react to the non-farm payroll reports, it's going to take everything down. Like Hood should not be below 100 after those earnings, but it's the nature of the markets. And that's why we're getting some pain. Okay, what else did I buy today? So it was not a stock. I finally bought this. I've been thinking of buying this for so long, and today I just did it. And I will be able to share it with you guys every day so that people can like accurately see this. Not sponsored by these guys, but today I finally pulled the trigger. I finally bought a TipRanks subscription today. Finally did it. TipRanks, for those that don't know, is a website that basically gives you all the analyst price targets. And I was getting so annoyed of like scouring the internet just to find this. And I was like, you know what? I'm just going to pay the damn thing. So it was $180 for the year. So now whenever you guys have a stock that you want to know the price targets on, I can search it right on TipRanks. At some point, I just wanted to see what the damn targets were. So as you can see right here on Grab, pretty much everything above $6. Mark Mahaney is the most bullish. Let's look at UNH. What do we have on UNH? Let's see the price targets there. So UNH average price target is 321, which is about 35% upside from here. Now, a lot of this stuff might be changed. A lot of this stuff might get changed over the coming weeks as they digest earnings. But as you can see, you do have pretty much all buys indicating, hey, this thing should be closer to 350, 400, at least 320, which is the average target on UNH. So that's what we got. SoFi. Okay, let's look at SoFi. SoFi's actually got upgraded a lot after those earnings. Yeah, average is 18. Okay, so that's still lower than before, but Mizuho, Dan Dolev, he's smart, 26. You had Devin Ryan, no price target yet, but he really liked it. TD Cowen, 22. Terry Ma, 21 from Barclays. Needham, 25. KBW has them at 13. I don't know what the heck that guy is thinking. Bank of America, 15. I think that's aggressive. This Baloney guy, Giuliano Baloney. I mean, some of his price targets feel baloney. He still has them at 6. And he reiterated that on July 30th, which was the day after their earnings. I mean, really? $6 the day after? Really? After 44% revenue growth? Like, you want to see Palantir? Dude, Rishi, by the way, I haven't kept up with Rishi. He reiterated 40 on July 30th with a sell. Dan Ives at 160, and then you got Loop Capital at 178. I probably said his last name wrong, but his price target is baloney. So, like but so the lowest price target on Palantir again is Rishi at 40. Even HSBC, dude, took them from 38 to 96. You got 160 from Dan Ives. You got Mizuho to 135. Piper Sandler got them at 175. So average price target on Palantir is also 111, lower than the current price today. But you do have some of those price targets starting to be either super high or super low on a lot of these names. But $6 on SoFi is a bit ridiculous. So that's what we got. Hood, let me check that real quick. Let's do a couple of them. Hood, Hims, and Oscar. So Hood, average price target, 130 by Devin Ryan is 106, pretty much in line. Hims, average price target, I think they don't like Hims, 42. Yeah, they don't really like it. The highest target is Canaccord at 68 on Hims. Actually, BTIG, but he hasn't reiterated it since February. So after earnings, they'll probably get some more upgrades or downgrades. And then Oscar got a ton of downgrades last week. Oscar averages 11.29. Oscar did get to 23 a while ago, and then it just kind of got hit at this point. Okay, I can't do every single stock, guys. I would love to do every single stock. I will try to do as many as we can on the show. But is it worth 180? I mean, to me, that's like my entire life is news and stocks. Like, yeah, it's worth 180 for the full year because any stock I can quickly check. But it's up to you if you feel like it's worth it. Maybe on the stream we'll do a segment on the market open for 5 minutes or something, just going through a bunch of different price targets and seeing. We just checked Palantir. Rewind. We just checked Palantir. Palantir average is 111. All right, folks, let's bring someone on to the show. Although he was on yesterday, he is a crowd favorite. And today we had a bit of market volatility. He's been investing for 2 decades, maybe 3 decades. And it's time to learn a little bit about how he handled the volatility today. I think his answer to my question, I'm going to say the question right now because I know he's listening backstage. My question will be, what do you think happened today in the markets? Or what do you feel about the 1.6% decline in the S&P 500, the first one that we've had in 25 days, 1% down on the S&P? I think he's going to have 3 words as his answer. I don't know if I'm going to be right about this prediction, but I think he's going to have 3 words as his answer. So let's bring him on. And I'll ask the question right here before he gets on. Steve, what did you think about the 1.6% decline on the S&P 500?
No habla inglés.
Well, that's not the 3 words I thought, but I think those 3 words are coming up.
If I knew how to say I don't care in Spanish, I would have said it.
You really don't care, huh?
No, why would anybody care? It's one day.
That's true. It is one day.
It's legitimately one day. I think the big difference in the market today versus 10 years ago, or you can't say 20 years ago because 20 years ago was absolutely completely different. But 10 years ago, information did not flow in this capacity this quickly.
Yeah.
There was no real-time information or anything like that. So, I think everybody's got to take this with a grain of salt and just realize that retracements are healthy. And just because the market goes down one day or even over a 5-day stretch, in the long run, it doesn't matter as long as you're making good investments in quality companies or index funds.
Dude, I agree with you. I 1000% agree with you today. We all went through April. We all went through the pain of that. We had a fantastic July. You got to give some of it back. That's just part of being an investor.
Well, and look, it's all paper gains until you sell.
Yep.
And when it comes down to it, if you're looking at things from a long-term perspective, what it does on an intraday or a day-to-day or a month-to-month basis doesn't necessarily matter. What matters is what happens down the road 5-10 years from now. unless you're being a day trader or doing the whole short-term swing trading, then you absolutely have to worry about this. But if we get a 5 or 10% retracement, history has shown us probably a good time to buy if you're a long-term investor.
Okay, so let's get into why. Do you know why the market fell today?
Yeah, I got an alert that non-farm payrolls came in lighter than expected.
Yeah, that's a nice way to put it. We lost 250,000 jobs on the revisions for the past 2 months. That is why the market freaked out. And then Trump, I don't know if you heard this, fired the head of the BLS like 30 minutes ago.
Great.
So what is your take on that? Let's break it up into two. What is your take on the jobs being revised down as much as they were?
You never want to see it revised down, ever. That only means one thing: unemployment's going up.
Yeah, and so then the question becomes, this is a timely conversation because we were talking about rate cuts yesterday. Rate cut probabilities, you know what they are now?
No, I do not.
91%.
Yeah, no shit. I mean, this is why I can never be on TV, because I would actually say that live on TV, like, yeah, no shit.
Real quick, we watched your doppelganger before you came on.
Okay.
You're driving, so you can't see the screen, but I will send it after. I'm telling you, Steve, this is your long lost like relative or something. So I'm just saying, and everyone agreed in the chat, by the way. So
this is exactly what I was worried about with AI. And I've been saying that this is going to be a problem and nobody's freaking listening. And Andrew Yang was right. He was the only person talking about this in 2016. It's just going to take a little bit longer to materialize. But the Fed needs to cut rates and make a better business environment where businesses are more inclined to borrow so they can expand, especially when you now have a revision downward and AI is expected to take more jobs.
Last year, they revised the job reports down by 818,000. I think you remember that. And then August, we had a really nasty non-farm payroll. And then Jay Powell, what he did in September was instead of 25, 50.
Yep.
Do you think that happens again?
It should. They need rates to go to 3%. They need 300 bips on the rates. They have to come down 150 bips. How they do that is a different story. But the reason I say 3% is because there's a lot of debt taken out at much lower rates, and you can't have such a wide gap when companies go to refi. Otherwise, earnings compress too much, and the only alternative is layoffs because, quite frankly, all services and goods have gone up in price over the past couple of years. There's not deals to be had to mitigate that unless you start acquiring companies and increasing your spend to get more economies of scale.
Right. Okay, so Powell's definitely going to cut now. Earnings have been phenomenal by the Mag 7 and by a lot of other companies. Is there a world where you think Q3 we could see the effect of tariffs or whatever other underlying weakness there might be in the economy to signal that the actual economy has an issue and rate cuts won't even help in regards to underlying?
Look, there's always a potential for that to happen. I just think that it's not going to be the Mag 7 that, let's keep Tesla out of it. We need to come up with a new name for the top 6.
No, we can't. We can't be disrespectful to Tessie.
I'm going to be disrespectful to Tesla. So we need to come up with a new name, but the top 6 companies are not going to feel a thing.
Put in the chat what you think the new name could be. What acronym would you come up with?
MagX Tesla.
That's so disrespectful to Tesla.
MagX Tesla.
No, that's like just objectively saying Tesla sucks. Like, no, we can't do that.
MagX Tesla. I love it. But yeah, MagX Tesla is not going to have a problem. Alphabet's still going to expand. Meta's still going to crush it. Amazon, did you see their guidance?
Amazing.
This is why I'm not worried. The top 6 companies are what? 35, 40% of the S&P at this point? Maybe 33%?
Yeah.
Just NVIDIA, Microsoft, and Apple are probably close to 18 to 22%, just the three of them.
One of the Fed governors stepped down. I don't know if you saw that news as well.
No.
And so Trump just commented, and he said he's happy that he now has an open spot on the Fed board to nominate someone.
Good. They're too tight, and it doesn't matter where you are on the political spectrum. Business is business, and lower rate environments are bullish for business. That's all there is to it. And let's not forget, there's a lot of personal debt out there, and you have a housing market that is still frozen. And the only way to unlock all this is lower rates. That's it.
We got a Trump tweet. In my opinion, today's job numbers were rigged in order to make the Republicans and me look bad, just like when they said they had 3 great days around the 2024 presidential election, and then those numbers were quote unquote taken away on November 15th, right after the election. Jerome Too Late Powell is no better, but the good news is our country is doing great.
I mean, does he have a point? I don't know. I mean, I don't know how you say it's rigged unless you actually have evidence that it's rigged.
Yeah. Look, the way we calculate job numbers in this country, there needs to be a change. But rigged means that the BLS is conspiring against.
Well, let me ask you this. How come we don't have real-time reporting? Okay.
I don't know.
Think about this. If Palantir can do anything, they can at least aggregate the data and have everything flow into freaking AIP and have real-time dashboards about how many people have payroll taxes taken out of their paycheck. Guess what? That's a federal thing. We should be able to see the number with every job lost or gained real time. Everybody pays into Social Security and everybody pays payroll taxes.
I tweeted about this today. I had some Palantir employees comment under my post. They also are in agreement that this is obviously something Palantir could fix.
Yeah, it's so simple that the fact that one, and I've said this for a while, the fact that we are looking at backward-looking data that's already 2 to 3 months old in some respects is ridiculous. All this stuff can be real time.
All of it. All of it could be.
I mean, if we can get a freaking clock on the internet that shows us our real-time debt and interest, why can't we get one for freaking jobs when it's all being reported in every 2 weeks when companies pay people?
Doesn't make any sense. Makes absolutely no sense. And they're already giving Palantir a bunch of contracts, so you might as well tell them, hey, fix this thing. That really matters. I mean, if Jay Powell knew about the revisions, Wednesday's FOMC would have been totally different.
You tell me he didn't know. Stop it.
I mean, if he did, then he basically lied for 45 minutes saying the labor market was strong.
I mean, I don't know how a Fed chair doesn't have access to that information.
It's tough, dude. It's really tough. Like when I woke up this morning and I saw those revisions, I was like, oh, they completely lied for the past 3 months. Yeah. And anecdotally, I'm sure you've heard this by a lot of people, but I've heard this from the chat. A lot of people have said labor market's not good. But every time I look at the jobs data that pops up on the screen, I'm like, well, the hard data says apparently the hard data is fake now. So
I think it also depends what pocket you're looking at. Is the job market not good for coders or computer programmers, but is it good for other areas? I mean, it's just like the stock market. Some pockets can do better and some pockets can do worse, depending on what is occurring in the macroeconomic environment. You got to look at everything in the aggregate.
Trump says he has heard that India will no longer be buying oil from Russia. That would be bullish for a trade deal, technically. Do you have any perspective on the trade rates that Trump announced yesterday on Switzerland and Indonesia and all that stuff?
No.
I mean, I think this will get tacoed out eventually. So
I just don't think it matters at this point.
Yeah, I agree. I mean, now we're going to get cut no matter what. So
yeah, I don't see how they don't start cutting at this point.
There's no way in hell they don't cut. Not after that revision. There's just no way. They could have 57 trillion% tariffs on Canada. We're going to get a cut.
Yeah.
Well, let me push back against my statement right there. Is there a world where you think inflation spikes up to such an extent that Jay Powell says he's afraid of stagflation and doesn't cut.
I think oil would have to go to 85 or 90 and stay there for a little bit.
Yeah, oil's actually down today.
I mean, it's I think you'd have to have a big spike and have it hold for that to start entering the conversation. But once again, just drill more.
Yeah.
Like that can be mitigated by putting more oil on the market.
Trueflation has us at 1.67%. See, this is the thing. BLS says we're at 2.7% inflation. How am I, as a American citizen, supposed to trust the BLS that it is 2.7% and the way they aggregate to get that 2.7% when they just lied about the jobs data for the past 3 months? Like, that's not me being a conspiracy theorist. That's me saying, well, wait a second. And you guys lied for 800,000 jobs back in, what was it, May or April of 2024 when they revised it again?
No, I think the real
Something's
question
gotta
is why do you need revisions? Why can't it just be accurate up front?
Yeah, well, that's my point. It's like, why is it not real time and
It should be.
accurate up front? No, it should be
It
100%.
definitely should be real time.
Like, I'm not crazy, right? It shouldn't be hard to find out how many jobs we added in the United States.
No, I mean, everybody who is on a W-2 pays payroll taxes and Social Security from their paycheck. They're not talking about people who don't pay those taxes.
Yeah. It's just, I mean, it's just,
You know, a lot of people that have an LLC and get a distribution from a corporation, they file their taxes at the end of the year. They're not paying throughout the year. That's not what they're talking about. Hence the word payrolls.
yeah. And look, if there's a 10 to 20% margin of error, then that's fine, right? Like, that's just inevitable. But these guys missed by 70 to 85%.
I don't even think that's fine. I think it needs to, there's too much data. And here's the other thing, the money's getting collected. How do you not know from how many people you're collecting the money from? Think about that. So every 2 weeks, the Social Security and payroll tax are coming down my paycheck. They can't freaking tally up how many people are paying that.
Yeah.
I mean, it's not hard.
I don't
The money's all going to somewhere. It's journal entries.
Correct. I don't think it's like, I don't think it's crazy to say this is like rocket science to collect payroll data to figure out a somewhat accurate number.
No, I mean, I'm pretty dumb and I can figure it out.
Yeah. I think most people would be able to figure it out. Bitcoin also puking today. I mean, kind of everything. Do you also think
I bought some Misty today?
Oh, you bought some? Oh, good. All right.
Yeah, because it was down so much. I bought some today because we got paid, you know, so I figured it's down, market's down. We got paid today. It's trading ex dividend. Buy some more Misty.
Well, Saylor came out and he said basically the TLDR is if our NAV goes up, we're going to issue more MicroStrategy to buy more Bitcoin. If our NAV goes down.
I heard the whole interview on my way into the office today.
So you heard Saylor on CNBC, you saw his orange tie, and you bought more MicroStrategy.
No. I heard he discussed the orange tie. I did not see it. Hence, I heard it. I was listening to it.
The point is he orange pilled you again into the office, and you bought more Misty. That's what happened.
No, it made me look at what Bitcoin was doing because I knew we were getting paid today and was going to trade at a lower price, and I got it just under 18.
Oh, it's not bad. $17.99 right now.
And I didn't have a reason not to.
Yeah, I mean, look, we are both fans of Misty because MicroStrategy is volatile and the covered call premiums are good. So
yes,
it's not a crazy buy right here.
It is
also,
not crazy.
Again, the time to buy this is when Bitcoin tanks because that's when you get a cheap price. When Bitcoin goes up, everyone wants to buy it, but that's when you're chasing it. So that makes sense. UNH 237 down another 5% today.
I saw that it was going down today. I got an alert.
Is it attracted to you at all?
Is it attractive from a numbers perspective? Yes, but it's not something I want to touch right now. It's got to get really attractive. Like if this thing goes to the point where it's paying a 5% dividend, then I would be very enticed to buy some. and just sit on it and collect the dividend, because I think there's so much headline risk from things that are unknowns that we can't account for, that it's not going to catch a bid. I just think it's dead money for a little bit. And plus, there could be more stuff that comes out over the next 3 months that impact it further. Like, the chart's horrible. The fact that it's breaking down below 3 the way that it is, there's too much downward momentum. It's just like Palantir. You can't short Palantir because of all the forward momentum. I don't think you can buy UNH right here because of the downward momentum.
Do you think it's meta 2022?
I don't. No, I don't. I don't. Meta 22 was a no-brainer. This is not a no-brainer. We legitimately do not know how new legislation is going to impact their cash flow and what the new legislations are actually going to do. There's too many variables about how everything's going to work. And we also don't know if large corporations are going to switch to a different provider next year because of all this stuff. There's too many variables. That's why I said it needs to get to a 5% dividend for me to even really consider it at this point, because I think it can go lower.
Do you have any thoughts on Ulti, the ETF, or no?
ULTY?
Yeah.
That's the weekly?
No,
Which one is that?
I think
no. YMAX is the weekly, I think. Which one's?
Ulti just aggregates every single yield max ETF and just pays you a dividend.
Oh no, I would not want to be in that.
Yeah, because you're not getting to pick which company. That makes sense.
Pick and choose. I mean, there's a reason why. I mean, I did an article about PLTY. That's been a bust. It's not like NVDY or Misty. It's because Palantir went up so much that in such a quick period, it couldn't recover because all their call options were underwater. So there's obviously ones I wouldn't want to be in.
Speaking of Palantir, and I'll link that article in the chat right here. We got Palantir earnings on Monday.
Oh, is it Monday?
It is indeed Monday. So we will have Palantir weekly tonight, guys. We'll have a preview with a bunch of charts and numbers and go through our predictions.
Is it whatchamacallit?
After hours, yes.
After hours? Interesting.
Yes. So my question to you is, what do you... Oh, Ulti is weekly, apparently. Okay, Ulti is weekly. What are you expecting for Palantir?
I don't know. Look, I wouldn't be surprised if they come out with 42%. Wouldn't be surprised if they come out with 36%. Nothing would surprise me with them. Regardless of what it comes out with, it's going to be good. It's just, is it going to be good enough?
So the analysts have them at 940 million.
All right, so figure 975.
What if they come out with $1 billion, bro?
That would be good.
That would be really good.
What did they do last? What did they do Q2 2024?
Q2 2024.
Like 640, 650, something like that?
678, yeah.
Okay, so you're talking about
40% or 45 around about.
Yeah, 325 up, yeah.
I mean, it would be pretty nice if we get there.
Yeah.
Now, here's my question. What if they have a good earnings, but it's not that good? What do you think happens to the stock?
Oh, I think that it can go down significantly. I mean, don't forget, and I know you hate hearing this, and a lot of people hate hearing this, but a decent amount of their income is from interest. Now, obviously, it's not going away, but it will make EPS comps a little bit harder in 2026. If the Fed takes rates down, it's not going to impact their revenue growth. That's not going to be impacted. But EPS may not grow at the same rate, and it may make it more difficult to have big blowouts on EPS with less income coming in from interest. I mean, it's almost 40% of their net income. And that is what gets distributed amongst all the shares. And issuing shares makes it where you need to generate more to keep the same EPS. So that's the one thing I worry about. I'm not worried about the revenue growth.
Yeah, but the reason it's not that interesting, or that's not that convincing to me, is because, like, if their operating margins are strong, rule of 40 is good, then, and rates haven't come down, so it's not like that's going to negatively affect.
No, they haven't come. That's why I said 2026. I didn't say 2025.
Yeah, but by 2026, top line growth should be so strong.
We hope.
Well, now we hope. It has to be.
I'm
Like,
just saying that it is so overvalued right now that earnings that aren't outright impressive, you could see a violent move to the downside, especially if the market does not rebound on Monday and we get another sell-off.
do you think that we need to further go down to flush out some of the pain and the non-farm payroll stuff, or do you think
In the market, I wouldn't be surprised. You have a perfect storm. Do you think that this is just a coincidence that happened on August 1st?
it feels a little, suspect? That's for sure.
Just saying. I mean, you had the Super Bowl of earnings this week, and I don't care what anybody says about Amazon. It was a great quarter. I mean, all four put up great numbers. Should have lifted the market, and it started to. So,
Dude, they took Amazon down 8% today.
which is ridiculous.
Like, we looked at their ad growth. Dude, they're growing advertising faster than Meta, Google, and Microsoft.
It's the third largest advertising platform.
And the highest rate of growth.
Yes.
So that was, that tells me the market was just annoyed today and they sold whatever they could sell. And Amazon got caught up. Meta, 780 to 750 today. I mean, there's ugly.
I also have a theory about why August is predominantly bad.
Okay, what's your theory?
And I don't think I've ever shared this before. I have a theory and I cannot prove it. But it also can't be disproven.
Okay, I'm curious. Does that have to do with milk?
No.
By the way, Steve's Milk Delivery Man, thank you for the $2 super chat. He said to buy the dip. So thank you.
Oh, I agree.
Real quick, Steve, let me just answer these super chats and then we'll get into your theory. Yalda Both, thank you for the $5. Did your dad sell his Figma shares? Yes, he sold it at 135 yesterday, so he's probably happy about that. Can Man, thank you for the $20, buying you a drink for all the perks, DD, and entertainment you bring us every day, twice a day. Thank you, Can Man, for being here. Thank you for the $20 super chat, especially on the red days. It's kind of when we all need to be together as well. And then Mike Walker, thank you for becoming a channel member. All right, what's your theory on why we tank on August?
So what normally happens in August? People go on vacations. Kids go to camp.
Yeah.
And what's the big thing? College tuition is due for the next semester, is it not? And for a lot of people, first year they're writing checks. Investments tend to get sold off to fund these things. Something that nobody ever talks about, but is a real thing.
Oh, that's a good point. August is when you have to start making a half a semester pay. You can't even do it monthly. It's like half semester payments all at once.
Yes. And for a lot of people, it's the first time they've had to write that check. And then you have family vacations in August. A lot of things come up in August. So 529 accounts start getting sold off. And if you're in an index fund there, then what gets sold off when all that starts getting sold? Biggest companies in the world.
What would you guys in the chat? What theories do you have on why August could be a weak month that no one talks about? This is a good theory because I remember in August when I was in college, you had to cough up, 15, 20 grand, get ready to pay for the year.
A lot of people don't put that in cash. A lot of people put that in index or total market funds.
Yeah, a lot of people seem to agree with the college. Also vacation. A lot of these.
Yeah, August is a vacation month.
Yeah. Christina says, "Yup, I sold to pay for my kids." Literally, I sold some stocks today to pay for my kids' private tuition yesterday.
Right. Right. You also have private school for high school and kindergarten and middle school and all that stuff that's due. I mean, August is a bill-heavy month. And I think that has something to do with it. It cannot be proven. It cannot be disproven. It's just a theory.
I think it's right. And then you have a lot of people that go on vacation, a lot of people that manage money that go on vacation and don't want to be over leveraged for at least 2 weeks, right? When they're on vacation. And that's when Europe gets a lot of tourism. So that's where you have less volumes in August as well.
Yep.
And stuff like that goes down. Yeah, that could explain it. I'm putting a chart on the screen. I shared it in the morning, but this kind of validates the August blues that most people have to deal with as well. I just paid for my vacation with sold NVIDIA and AMD options. There you go. Philip says my daughter's Yale tuition was due this month. First of all, Philip, congrats on your daughter going to Yale. I got rejected by Yale.
I want to know what that bill was.
Yeah. Yale is expensive, bro. Unless you got
The only reason I say that is because I know what my buddy just wrote a check for freaking Hofstra, and it was absolutely obscene.
It's aggressive.
It is so aggressive, and I hate to say it, but I'd love to say it. College has become such a scam. It's unbelievable.
Yeah, I mean, well, the thing is, see, if you go to an Ivy League, I think the brand of it is so strong that if you come out of an Ivy League and you're not successful, that's on you, bro. That's not the world being unfair.
No, I'm sorry. You can't freaking go to Brown and major in Sanskrit. Like, I'm sorry.
No. My point is you could go to Harvard and major in Sanskrit and you will get some fancy consulting job because you have Harvard on the degree. Dude, like, I have enough friends that have gone to Ivy League schools that have just been so blessed with opportunities because they have Stanford or Harvard.
Oh, look, it definitely stands out on a resume. There's no question about that.
Not only it stands out, it is like Bridgewater Associates, KPMG, Deloitte, all these fancy firms. They see that, you skip the rest of the line, bro. Like, it's a real thing. Someone said right here, my daughter goes to Stanford Law, crazy opportunities. Stanford Law is one of the most prestigious law schools in America. You're going to get a nice multi-six-figure salary after Stanford Law.
You better.
And if you don't, that's on you, bro. That's not it's a leg up in life when you have that Ivy League brand. So, and again, obviously you don't need to go to an Ivy League to get those opportunities. It definitely helps. You have to go through networking and all that stuff, but just like the circle of influence you're in the Ivy Leagues is very important. Now, is it worth $100,000 a year? I don't know. Apple 202, they crushed earnings. Why do you think the street took this one down today?
I don't know. I think it was just algos probably. I really do believe a lot of it is algos, and just a lot of people have stop losses, and a lot of it's high frequency trading. There was no reason to sell off Apple.
Yeah, I agree.
It's hard to find things that go up when the market does this. Think about it. What was the reason to sell Meta? You're telling me something changed in the past 2 days? Think about how excited everybody was and how much Meta went up yesterday. Yet today it goes down. What changed?
Dude, the market
changed.
They will mess with your mental, bro. Like, especially if you're new to it. You see Meta go to 780, you're like, all right, I'm buying 780, good. We're going to 800, and then whoop, right down 750. And you're just like, wait a second, that's not what's supposed to happen. But then that's what happens.
It's a wild ride.
It is absolutely a wild ride. Here's Dan Ives. We can listen to him for a couple minutes dissecting Apple.
What did Figma do today?
It was up 2%.
Was it really?
Yeah, it's kind of scary. I don't understand why, but
so that did not get sold off. I wonder how many companies decide to go IPO real quick to try to capitalize on this.
Well, if we get more red, I think we're going to have more companies immediately try to IPO. Here's Dan Ives earlier today.
Back, the NASDAQ is lagging this morning, falling after results from Amazon and Apple last night. Amazon.
I mean, look, I view it as an overreaction. I mean, to me, if you look at AWS, strong, you look at ultimately guidance. I mean, guidance from a top line perspective, I view as pretty robust. I mean, I actually believe this is sort of the renaissance of growth that's about to happen at Amazon. I think, look, you're just seeing investors hypersensitive, but you look at overall big tech earnings, monster results from the Scotty Scheffler of tech, Microsoft. You look at what we saw from Meta, and even when you look at Apple, I mean, I think there's a big
the market response to at least not Meta, but the other three. I mean, Apple's down. Mm-hmm. Obviously, Amazon, the worries about the guidance, 17.5% growth at AWS, but far less growth than Azure, for example. Microsoft shares did not perform particularly well either after a very strong quarter. Yeah. Concerning to you?
I mean, to me, I think it's just to begin. I mean, look, we think Microsoft's going to be a $5 trillion market cap in 2026. And then when I look at what Nadella is doing in terms of the cloud strategy, I mean, those are Azure numbers that were beyond bull case. And I think ultimately investors, they're going to continue to try to find negatives here. When you think about the big tech growth story and the AI revolution, I mean, this is just the next phase of growth that's now going to the second, third, fourth derivative. Apple being in another category, because right now they're essentially on a park bench drinking lemonade, watching the AI revolution go forward.
Yeah, is that why the stock? I mean, that said, they're also not spending the money that their so-called competitors are at all. They're nowhere near that on capex. But the stock down. Now, granted, we've been talking about the macro reasons today, but you would have expected with 13% growth of iPhone sales that the stock would be up.
Look, it was a robust quarter. I mean, you look at the demand bounce back that we saw in China, 4% growth. iPhone demand that's actually going to show growth into the next few quarters. But the elephant in the room is AI. Because the reality is, like, if you look at WWDC where we were, that was a back to the future, right? In other words, like, they're years behind. Investors want to see them now change the status quo. They're on the treadmill. We've talked about it. Kramer's talked about it. I mean, Perplexity is the no-brainer deal. Because the reality is they're not going to have AI innovation that's going to come internally at Apple Park.
Amit, stop it. So don't we think that that's a problem, that Apple is only spending 12 or 13 billion on CapEx?
Well, not only that, Bloomberg is reporting right now, this is what Tim Cook said to employees at an all-hands meeting. The AI revolution is as big or bigger as the internet, smartphones, cloud computing. Apple must do this. Apple will do this. This is sort of ours to grab, Cook told employees, and then he said we will make the investment to do it.
Okay. Well, it's great to say, but they actually have to do it because they're so far behind. And I bet you the narrative they're going to spin is, we wanted to see what everybody was doing and put the bones in place so we could do it right. And that's going to try what they try to say.
Do you think there's any legs to that narrative?
I mean, if Tim Cook comes out and spends $100 billion in the next 6 months, I think there could be. But he's actually got to do it. They got the cash to do it. You buy Perplexity and you buy, it would be a freaking FU to everybody if they buy CoreWeave.
Oh, dude, that'd be crazy.
Just for the hell of it.
That would be
because why not? And then they screw with everybody's freaking capacity and they take whatever they need.
But CoreWeave, they would have to pay almost 130 billion. They're not paying that.
I'm just saying.
Just to resell GPUs like that.
No, I'm just saying it's a it would throw a big monkey wrench in everything. It's not a good idea. But imagine what the narrative would be if they did something like that.
Okay, what is a public company? I want you in the chat to answer, not Perplexity, not the private ones, that you think Apple could buy. What do you guys think? By the way, Jake says, how do you say your name? My wife, who just started listening, is trying to tell me I'm wrong with how I say it. It's Amit. You can say it however you want to say it. I don't really take offense to how people say it, but it's Amit. That's how you say it. So what do you think, Steve? I mean, public companies that don't say Meta, because I know you'd want to say Meta. And Big Bear AI is a bit aggressive, bro. He did say, Tim Cook did say grab. He did say it's our opportunity to grab. So I mean,
hey, so we what companies could they buy? I mean, look, they could buy a lot, and I don't think they're looking at content, so I'm not going to rattle off those names. But
I'm gonna ask Grok.
It would be a kicker, and they could never do it. I mean, shouldn't say never, but it would be a crazy acquisition if they bought Workday or SAP.
A SaaS company?
Yes. Or Paycom or something.
They need to buy something that fits the Apple ecosystem. I mean, I have one that no one's gonna like, but PayPal?
Nah, I mean, I've said that in the past. They're not going to do it. PayPal would be the best company for them to buy because they could probably get it for 80 or 90 billion and make the money back on PayPal's free cash flow in the next freaking 12 years. And it's immediately accretive to EPS and freaking revenue.
The problem is Apple Pay is so competitive with it that it would just be kind of weird to have both of them together.
Why? You just it's a bolt-on acquisition.
Yeah, no, that's true. It's just I feel like they could take market share away from PayPal versus having to buy them.
But why not just buy them and integrate it and own all of it?
Yeah, but they would have to pay $60 billion for freaking PayPal. For PayPal, bro.
Yeah, it's a company that does $6 billion a year in free cash flow. Don't look at it as PayPal. Think about it as They're going to spend $60 billion to add $6 billion of free cash flow to the bottom line and fortify their payment system and control a portion of stablecoins.
What about, by the way, Grok 4 is slow, guys. This is why my one critique of Grok, it is freaking slow. Like,
Are you using expert mode?
I'm using the reasoning thing and it's just slow. Like,
I didn't find it to be that slow when I used it.
I mean, it's still trying to consider the acquisition targets. I'm like I know it's like searching the web and stuff, but still. What about SoFi? What if they buy SoFi?
There's no reason to buy that. Plus, they don't want to do a bank license.
Grok is searching for Palantir market cap. It's considering Palantir. Could you imagine they suggest Apple buying Palantir? Palantir's market cap 370 billion, making it too large for Apple to acquire reasonably. Okay, there you go. SoundHound AI is the argument that they came up with.
Man, they're better off buying a Warner Brothers Discovery at that point.
They're better off buying back their own stock. And that's not to say SoundHound is bad. It's just like they're not going to get massive growth with SoundHound.
I agree.
What if they buy yeah, we talked about Madison Square Garden. Steve has talked about that.
Oh, that's a no-brainer.
What about Snapchat?
No.
That's
Dead company.
That's 700. That's not dead. 700 million monthly active users. I mean,
It's a dead company.
Steve probably got a phone call just now. I don't think Snapchat's dead. I think they have a lot of users. I don't know if they're the most valuable asset though, from an AI perspective. Okay, he disappeared. He should be back in a bit. I agree. Snapchat doesn't have really a good moat, but in the public markets, I wonder what AI strategy is out there for them to buy. He got into a fight. Yeah, he needs to learn how to box to get into that, to win that fight. TikTok, that's too expensive. They're not going to be able to do that. Can we discuss Circle? I don't know a lot about Circle other than stable coins are really important. I have no idea what to expect for their earnings next week. I mean, I don't even know why this valuation makes any sense on Circle, to be honest. It was down 8% today, probably because the market was like, hey, this valuation is kind of stupid. And look, stablecoins, bullish stablecoins. I don't know why you would pay this much for Circle, even if it is the de facto stablecoin company in the public markets. But I will learn about them as they put out their earnings. I don't even know what metrics to care about for Circle. So when we get their earnings next week, we should have a better understanding of it. Did you get into a fight that you had to box?
What?
You got into a fight with someone. You had to box them, right?
No, I pulled into a place that had no service. So.
Okay, just making sure.
Hold on one sec.
Okay. Bloom Energy. You know, an energy company wouldn't be crazy. An energy company wouldn't be crazy. But it might be expensive. The context for the boxing joke, guys, because Steve said I need to learn how to box because I'm going to get into a fight when I move out on my own. So that's why I'm saying he got into a boxing match.
You should learn how to protect yourself.
I guess Perplexity is the only one that makes sense then, right? Like,
I mean, Perplexity from an AI standpoint, but there's other things that they can do.
You know, Google owns 14% of Anthropic.
What about buying ARM or something?
That's going to be a lot of money.
What about buying Intel?
Intel is interesting.
Buy Intel, and now freaking utilize them for all the fabs for your chips and take their freaking design teams.
For those asking if I tried Comet, I've tried it, but I don't use it daily. It has not become part of my workflow, but I've tried it and it's good. I just haven't like really used it every day yet. I don't hate the Intel argument, but I just also think Intel, like Apple's already making their own chips in-house too. So
what, Dorina?
So if Apple's already making their own chips in-house, it seems unlikely that they would buy that. Navitas, how did that one do today?
They're doing all the design, but isn't freaking Samsung their fab or Taiwan Semi? They're not actually producing the chips. They're doing all the design work.
I don't know exactly, but I do think Apple is making some of their own chips. Maybe I'm wrong, but
No, they're doing the design work for all the A series chips, and they moved away from AMD and Intel. But they're definitely not manufacturing the chips. They don't have manufacturing plants.
I just asked Grok. It seems like you're correct. Yeah, Apple does not manufacture these chips.
No. So you buy Intel for pennies on the dollar, and who knows? I mean, at least it helps vertically integrate themselves. And it'll take costs away.
No.
I mean, that could be something that works.
Or simple, they just make Siri usable and they charge $20 a month to really make Siri legit. And boom, there you go.
Well, I mean, you could go down the content realm and say they buy Sirius Satellite Radio, buy MSG, buy freaking Warner Brothers Discovery. I mean, those are all bolt-on acquisitions that helps Apple's services.
You know, I've had a take for a long time. It's probably too big for them to buy it now. But I've been saying, I think since 2022 when it was cheap, we should have bought Netflix.
I agree with that.
But there's no way they can pay, what, $500 billion now for Netflix?
No, that's why you buy Warner Brothers Discovery at a fraction of the cost.
Yeah, but Warner Brothers has $70 billion in debt, which is not really something I think.
I don't think it's that high, man.
It is that. Hold on, let me check.
No, it's
How
not.
much
It's like
debt
40 something or 30 something.
Oh wow, that's way better. 40 billion instead of
Yeah, it's not 70. And they've been paying down. It was like 56, and they paid down a bunch of it.
Yeah, you're right. It's 38 billion, but still, that's a lot of debt, bro, for content.
Okay, but what's their EBITDA?
I don't know that. I'm just saying. Like,
You're in front of a computer. I'm not. I'm walking through this freaking city.
let's see. All right, so you don't want to look at net income. You want to look at EBITDA for these guys.
No, what's the EBITDA? Because they have all the expenses from
2.7 billion. 2.7
Yeah, I
billion.
mean,
Oh, for the year, 9 billion.
Yeah, so 9 billion in EBITDA. That's a big stream of income right there, and it gets embedded right into Apple TV, and you take all those assets off of cable and say screw you, or you keep them on cable and keep that stream of revenue.
I've never hated this idea. I just think the debt is something Apple shareholders might not love, but I don't hate the idea.
But
In terms of going for content.
It's also an asset that you can sell at any given time to Netflix or Amazon because they'll both buy it. If Apple buys it, it becomes more valuable instantly.
But see, the problem is WBD's market cap is 31 billion. Let's say they pay 40 billion. That's a lot of money in the age of AI to pay for content. Like, I do think the market would be bearish.
No, I'm just saying, when you look at the assets that they own, I don't think it's a crazy deal. You talk about that. You're talking about HBO. You're talking about freaking TBS. Like, you're talking about crown jewel of assets.
Yeah, you're not wrong. And also, I mean, their whole Apple TV thing, there are some gems on Apple TV, but if they could distribute HBO Max to and just make that Apple TV to their billions of users, that's the type of content that I think could get people to pay for actual Apple TV.
I agree. It makes it much more attractive.
Well, we didn't talk about the most obvious thing they could buy.
More Apple stock?
No, the most obvious thing they could buy.
What?
Dude, it's obvious. How did you not say it yet?
Just tell me.
You don't want to guess?
I do not know.
Dude, they should just buy some damn Bitcoin.
That's a dumb idea.
It's not a dumb idea, bro. They should buy some Bitcoin.
It's a dumb idea. No, it's a dumb idea.
Bitcoin's going to do better than whatever.
For the business. No, it doesn't matter because they do 100 billion free cash flow a year. They don't need to put Bitcoin on the balance sheet for it to go up. They need to fortify their business. Bitcoin does nothing for the actual business operations. They
Bitcoin
want to
goes
take 10
up.
billion and buy Bitcoin just to have it. If they want to take 10 billion and put in Bitcoin just to have a treasury asset, sure, fine. But that's not where they should park $100 billion.
No, not 100 billion, but 5 billion of Bitcoin is better than 5 billion in
Sure,
Apple stock.
I'm fine with that. At this point, I'm fine with that. But
Apple
they
would
have
never
to
do it,
make
but-
strategic acquisitions.
Yeah, I mean, look, Apple would never do that because Berkshire is one of their largest shareholders. Like they wouldn't, they would sell the stock. I don't know if they would sell the stock, but I think Berkshire would give Tim Cook a call and be like, "Hey, buddy, not so fast."
At the same time, I don't think Tim Cook needs to worry about that because they have so much cash on the balance sheet. Taking $5 billion and making an investment. I mean, shit, they lost more than that on they lost $15 billion on Titan. Buying $5 billion in Bitcoin doesn't sound like a bad idea.
I agree. What about
I don't think it's
Disney?
crazy. Oh, fuck that.
Wow, that got the F word out of you. That was passionate. Okay, so why not
That would
Disney?
be so horrible.
Why?
Because now you're running parks. Like they don't want to be in that business.
I mean, parks are a great business.
I mean, unless you say that buy Disney, throw the content in Apple TV, and then spin out the parks as a separate business, sure, I can get behind that. But buying Disney and actually operating the parks and having that in the portfolio, no. But look, Disney's done nothing over the past 10 or 20 years. I mean, I would do it just to get the content, spin out parks, and try to get the content for pennies on the dollar.
Yeah, I've been pretty bearish Disney for the past couple of years too. Now, granted, I've been bearish all content, and Netflix obviously worked out really well, but I don't.
Pull up a 10-year chart at Disney. What's it done?
Yeah, 5 years is nothing.
Exactly. Pull up 10 years.
Max, it's up 6,000%, but
Yeah, okay, but you're going back to the freaking 50s. Like, come on.
so
Don't do that.
2014, the stock was at. It ended at $90. It's at 116 today.
All right, so it's up a little bit in the past decade. It's well underperforming the S&P, and it barely does anything accretive to earnings outside of content.
I agree. I completely agree. Aggressive. Reddit is not crazy. Reddit, I think, would be but Reddit, Apple having to manage that would not be that easy. They're not going to buy AMD.
No, they could have bought AMD for pennies on the dollar. Similarly, they could have bought Tesla, but they did. I mean, Reddit's not a good idea. Reddit doesn't do anything.
Well, Reddit's growing really well, but I don't know if they want to pay $40 billion for Reddit.
What business advantage does Reddit give them?
No, nothing. I agree. I mean, it's an interesting platform, but from an AI perspective, it's not like some strategic advantage. I think not in a meeting.
They should go buy freaking Dallas Cowboys.
Yeah, I mean, I think okay. Let me do this. Let me do this poll in the chat. Do you think Apple ends the year with an acquisition or not? That's the question. Like, if I had to bet, I would say no.
I don't know. There's a lot of pressure on them at this point.
There is, but last time Tim Cook made last big deal he made was Beats by Dre for $3 billion in 2014.
Yeah, but there's a lot of pressure on them right now. I could see it happening.
I agree. Matt says, please look into Lemonade. We've looked into it already. I'll put Steve's article in the chat. He's not really a fan of it, but you can read his research if you want.
Yeah, I prefer iced tea.
I prefer iced tea. Yeah, AI insurance is cool, but it's not the most exciting. I think there's a lot of other things.
So, do people really think that no other company is going to have this, or that they don't already have it? Like, stop.
Yeah, I don't know what people are obsessed with about this. I think it'll outperform. I just think if the thesis is AI, which is from everything I've read about Lemonade, it's insurance, cool, but AI is the moat. Well, there's a lot of things that are doing AI that are a bit more sophisticated than insurance. I don't see what the reason is to get super, super, super excited for. But there's a big cult around it, which does matter as well.
Yeah, there's a big cult.
Yeah.
I don't know. You buying some Ethereum this weekend?
I'm not, but I can't say it's not good to buy it at these levels at
I think you
3,500.
should buy some Ethereum. Yeah, I think you should buy some Ethereum.
I think you should buy some XRP.
Listen, I'm gonna buy some Ethereum this weekend.
Then he goes quiet. Then he goes quiet. Speaking of Ethereum, we do have Mr. Tom Lee right here. We can listen to a little bit of him. He had a new interview today talking more about Ethereum as well. So let me pull this up real quick.
Notes zero downtime. That matters to Wall Street. I actually think that's almost a little bit of a hat tip to Wall Street because banks care about zero downtime. But Yen, as you know, there's people who have a pair. They like something else and they're short ETH. So I think 4,000 is a line in the sand. But to me, it's just a matter of time.
I know that you're very bullish on ETH. That you just said it's just a matter of time. But let's look at the bear case. What happens if we don't get to that $4,000 level?
I don't think it's critical. I think it's like someone who just months ago would have said, well, Bitcoin can't hold 100,000. I mean, how many people said that Bitcoin wasn't going to hold 100,000 because one, there's nothing supporting it or there's no new buyers behind 100,000. But guess what? Bitcoin's 120,000 now. In fact, I think that there's plenty of new buyers for ETH above 4,000. So to me, I think 4,000, if someone's thinking that that's like a level of resistance that represents something super meaningful, to me, I think it's paper.
I was reading an article that quoted you recently, had you describing the recent market rebound as the most hated V-shaped bounce in history. Can you just unpack that a little bit for me?
I think every bounce since COVID has been a hated bounce because if someone was personally realistic and introspective, they didn't believe we could recover from that initial COVID decline because the world economy shut down. And then when stocks tanked because Fed Chair Powell initiated the fastest rate hikes in history and stocks tanked in 2022, I know that every one of my institutional investors said, Tom, there's no way stocks can come back. Not every, but most, because they said the Fed is trying to engineer a recession. So those two rallies were very hated. This rally, because stocks tanked because of tariff Armageddon. And we have to keep in mind that if you look at political donations or political affiliations, 60% of professional stock investors voted for not President Trump. They voted for someone else. And that means that the stock market does not believe the Trump agenda. And that's why when stocks fell in April and we talked about a waterfall decline, having symmetric bounces unless there's a recession, it was met with skepticism because the pushback was the Fed is not going to unleash liquidity. So there's no way you're going to get a V-shaped bounce. Well, we got a V-shaped bounce. In fact, that is consistent with history. And I think what makes people really hate these rallies is that since the end of 2019, economists have become very important voices in macro decisions for correct reasons. Economists help you decide how an economy behaves when you shut it down or how you deal with inflation or how you deal with tariffs. So they are obviously are important voices. But when economists start to tell you that you have a recession and therefore you shouldn't own stocks, keep in mind, economists have predicted like 13 of the last 3 recessions. So I think that has made this the most hated rally. And that's why, of course, once we broke to new highs, stocks have been levitating and there's still a lot of cash on the sidelines. That whole analog applies to Ethereum, by the way.
He's bullish ETH. He's bullish ETH. And the broader market, but that's Tom Lee.
I think you should buy some Ethereum on that.
Look, I don't hate it. I don't hate it at these levels. Not at all. All right, Steve. I think that's it.
Some Ethereum.
You're also cutting off, Steve. Your connection's pretty weak. But I think that's the end of the show anyway.
All right. I'll talk to you later.
All right. Thank you for joining again. Steve's link, I'll put in the chat. It's Seeking Alpha. We'll talk to you next week as well.
All right, later.
Dude, you guys are crazy, bro. You guys are actually crazy. Like, you guys are ridiculous, bro. Yes, there's a girl interviewer. Like, goodness gracious, bro. God forbid I bring a girl onto the show one day. I don't know what you guys are going to do. I don't know what's going to happen. Like, you guys are actually crazy. Legit crazy. Trump is not live. There's no way this guy's live on a Friday. Is he live? Is he talking about tariffs or JPL? No, he's not live. All right. He's not live today. Doesn't he golf on the weekends? Doesn't he go to Mar-a-Lago every weekend and golf? So she didn't say right 800 times. That's correct. She did not say right 800 times. The latest tweet we got from Trump again is that the BLS numbers were rigged. This is what I felt he was going to say, bro. He didn't exactly say it on the first tweet, but he said it on the second tweet that he's firing the BLS head because he's saying they were rigged. I mean, he's not going to take accountability for the market having a weak jobs report. And I agree with him that we need to change the methodology of the BLS. Is it rigged? I'm not exactly sure. But that's what you got from Trump. All right, folks, I think that is it. Again, bloody week. It is okay. It's the nature of investing. Everything pretty much down 3 to 4% on the day of the S&P 500. The first real red day, down 1.6% that we've had in a month. I think the markets will be okay over the second half of the year, but we're going to have to go through a little bit of pain to deal with it. Steve mentioned a bunch of reasons why August tends to be bad. And then overall, this labor market stuff, Fed rate cut stuff, that has to be factored in over the next at least 2 weeks before we really see, I think, a meaningful understanding of how this market wants to go forward. So August and September tends to not be the best. We're going to be analyzing it every single day. These are when opportunities arise as well. Maybe those opportunities are really good. Maybe those opportunities are rather shallow. But nonetheless, we will be analyzing it every single day. Palantir Weekly tonight, 11 p.m. Eastern. We got earnings coming up. Monday's a big one. Super Bowl for all of us, especially for the channel. Been covering Palantir for a long time. So this will be one of the most important earnings because this is the first time the stock has been at a $370 billion market cap going into earnings. Last time I think we were 125 going into earnings. Fell to 108. Now we're at 155. So it'll be a big one. Maybe they surprise with $1 billion in revenue. Maybe they don't. I think they will beat expectations. So I think that 970, 980 number is not crazy. Again, we'll talk more about the numbers tonight. But that is what we're going to have to see for Palantir on Monday. All right, folks, that is it. Again, thank you, everybody, for the love this week. It was a big milestone for the channel. We got that currently right now. Moment in. And again, it was just super cool to be able to do it. I am putting the Miami meetup link in the chat. A bunch of you guys that signed up over the past 2 days, I sent you the email on what you have to do to confirm your spot. I will put the link again in the chat. So if you have not signed up but you want to go, just sign up with your email and I will send another email later on signing up for Miami. But yeah, it was a great week. It was, outside of the crappy Friday, we had phenomenal earnings across the board. 2 companies I care about deeply, Grab and Robinhood, just crushed earnings regardless of what happened to their prices. And based on all the reports I've read after their earnings, all the analysts seem to be on board with what they did and their strategies. Meta, Microsoft crushed it as well. Amazon did crush it. Apple really did crush it, just based against the expectations. The companies that mattered, they put up the growth. That's what ultimately matters for the economy. Now we got some new macro stuff we have to deal with when it comes to the labor market, and we'll try to deal with that going into the second half of the year. All right, that is it. Thank you again, everybody. Appreciate it. Been a long week. We are into the 8th month of the year. August. Time is moving fast. Before we know it, we will be September through December, which is a very, I think, fun time of the year. But we're going to have to get into that. And then we'll be in 2026. And then we will be in 2026. I'm not going to rant for 30 minutes. I actually have a meeting in an hour, so I got to get to that. And also, I think everyone's tired. I think we're all tired. It's been a long, long week. It was kind of the brunt of earnings season. We still have a lot of earnings next week, by the way. Lots of earnings next week. So it's not like today's the end of earnings. NVIDIA's at the end of August. But still, next week, we have Uber, Palantir, Hims. No, we don't have Hood. Let me change it. We do have Palantir. We have Hims. We have McDonald's, Shopify, Disney, Axon, Elf, DraftKings, Airbnb, AppLovin, IONQ, Duolingo. SoundHound, Rocket Lab, that's a big one. Square, Trade Desk, Monster, Instacart, Lily, Crocs, Datadog. I mean, we got a lot of stuff. So AMD, yeah. So tomorrow will still be a pretty busy week. And then we move out in about 3 weeks. About 3 weeks, we move out. Got a whole new apartment, a whole new setup. We got a lot going on in August. But again, from the bottom of my heart, thank you to everybody who just showed a lot of love this week. It is, to me, I'm very, very, so Farzad, I did a podcast with Farzad today, and he asked, it'll probably be coming out soon. And his last question was just like, how are you motivated to do this every single day? And I'm just like, I'm really grateful. First of all, I'm obsessed with the market, so that makes it easy. But second of all, I'm really grateful that people care enough to consume the content, that people want to be part of the community. And that when we have moments like currently right now in person with Mr. Vlad, that people genuinely are excited and happy about that moment for the entire community. It's really cool, dude. It's really special. It's very rare. You got to build these things the right way. You cannot take the shortcut. If I've learned anything from Palantir, you do it the right way. You give, and then you ask. But you don't try to take a cheap route. You don't try to monetize early. You don't try to sell out. You don't try to push some stupid agenda to make money in the short term. You focus on unconditional value. And then what you get rewarded by is people actually giving a you-know-what about your success. That's what you get rewarded for. It's not the $5, $10 a month stupid subscription. It's people are genuine, like the fact that you guys were genuinely happy that I got to ask a question for the first time that I think has ever happened, a retail investor in person. Retail investors have asked questions before with Tesla. Shout out to Gali, Hyperchange in 2018. But in person, it is the first time it ever happened. And people were genuinely happy for me. That is my payoff, not whatever, a lot of the finance people try to do to monetize. So that means the world to me. That's priceless. And we get to go on this journey together every single day. A little bit of a rant. See, every time I got to end it off, there's got to do something. You got to do something. You got to do a little something. Happy you squeezed in the currently right now. That really was the game time decision. And my heart was beating too. I was like, wait a second. I have to say it was just, I was talking to myself. I was like, no, you have to do this. And then I was like, but that's inappropriate. That's kind of stupid. I'm like, no, screw that. You have to do this. This is going to be funny. And so thankfully we did it. And we made it happen. So it was fun, man. It was a cool week. It was a really, really cool week. And I think it's there's a lot more I think that can happen over the next however many years we do this. And this is just one of those moments that sets up more and more moments. And I think the most important thing is just being grateful throughout the process. It's very similar to, you guys got me. I really need to, I need to make the stupid rant intro at this point, because when I get these thoughts and I'm ready to start talking, I just begin talking, and I need to make this freak. I already started editing it. I downloaded the audio from the CNBC breaking news thing. I cut the audio from the clip, and now I just have to make the video overlay. But I have a file on my Flamora, it's my video editing software, called Rant Intro. I just didn't finish it, but I need to do this thing. What I was going to say is it's very similar to the argument I was talking about today about building character on red days. It's really, really important, dude. And ironically, my mom brought it up, right? When I went to see her, because the entire market was down. And I'm my mom's son. We were both on the same wavelength. This is how we talk and how we have conversations. It was you have to be grateful when things go down and when things go up, so that you don't turn into someone super arrogant when things go up and treat everybody like shit because you think you're smarter than everybody. And you also shouldn't treat everybody like shit when things go down and feel like you're a horrible person, or feel like you're an idiot, or feel so bad about yourself, and then take your anger out on other people, because that's the nature of investing. That's the nature of life. You'll get punched in the face, and then you got to get back up and do something. But then you'll also have really big moments like I had on Wednesday with Hood. But you can't let it get to your head either, right? That's not a moment that should get to your head, because it can be taken away. And when you do have some humbling, like today, humbled all of us, down as much money as we are, it's not the worst thing in the world either. And that balance, I think, is so important to have, because without it, you could drive yourself crazy to the upside or to the downside. And it's just very important to stay level headed there. So look, I'm probably never going to come out with merch, guys. I don't like, again, I don't like selling stuff. If I do it, bro, I feel like I would just like do it as a fun thing to give away. But I don't want to set up a merch store. I don't really want to, like, it's not, I don't know. I don't want to sell stuff. So I'm probably never going to sell merch. Again, I've never done an advertisement on the channel. I don't like it. I don't want to do it. I told myself a year ago, that's not the route I want to go. There's been plenty of opportunities. I don't like it. I don't personally want to sell stuff like that. If I ever have a product or something that I give to you guys, it's going to be something that I really care about, something that I've built with a lot of passion, and something that I think genuinely will be useful. And quite frankly, it's probably going to be something that's free. And the most you're going to have to do is sign up for it. And maybe you get value out of it, maybe you don't. But like the idea of monetizing, it's not what I want to do. Sell courses, then yeah, that's the right idea. Sell courses. I should get a currently right now like shirt for myself or like a hoodie. I should do that. It's a good idea. It's a good idea. We move out around August 20th. Around August 20th. Selling a brick, that is good. I mean, I am going to Miami. There's a certain type of brick we could sell in Miami. So that is a good idea. Orange, thank you for this thank you for the comment. Amit, hope your show goes on for many more years to come. You have no idea how many of us rely on it to show the consumer macroeconomics and make informed decisions. I really mean it. That means a lot to me, and that is the goal of the show, right? There's a lot of people that are super experienced that are watching, a lot of people that are just getting into the world of investing, and I think the goal of the show should be to apply to everyone and really just bring data together and bring people like Chris, Jason, Steve, Matt, everyone's perspectives together. And then bring the energy, you know? That's the other thing. That's the other thing I told Farzad. It's like, you got to have energy to do this. If you don't have the energy, it's not, the audience is not going to feel the energy, you know? And it's important to have it, because without it, what's the excitement or fire to the content? Prit Paul says, you are awesome, bro. That's why I got my kids started to watch you. Yeah, you know, a lot of you guys have messaged me that like your 15-year-olds or 16-year-olds that are interested in the market have started watching. And it's very humbling as well, you know, because they could be watching. I mean, dude, at 15, 16, I was not watching finance YouTube. I was watching anything else, right? There's so many random things that pop up on YouTube, Logan Paul, vloggers, right? Like there's all these random things that kids watch, but like for them to care about finance, it's important because, you know, those kids will learn a lot and be way ahead of their peers, because most people in the world just don't know about finance or even care about it. So currently rant now. Maybe that needs to be on the hat. I love Metallica. Dude, we have so many phrases too. We have so many phrases. That's why if we have another moment like that, maybe not with Robinhood, but another like community moment, like I've got to throw out the phrases just so you guys know that I'm thinking of you. Maybe whenever we do CNBC or Bloomberg again, we got to throw out a phrase. We got to see. We did currently right now, so now we got to do a different one if we get a chance. I'm not asking a question on the Palantir call. They do not take retail analysts, so I can promise I'm not going to be on the Palantir call. But we will have Palantir Weekly tonight, and we'll talk about it as well. All right, that's it. I got to be out. Thank you again, everybody. Means the world. Again, deeply, 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 deeply appreciate every single day, 2 times a day, people being here. I love doing this. I hope to continue doing this for a long time. A lot of new people are joining the channel. I think people feel it's a really safe community to be part of, and it's a very encouraging community to be part of. The Miami meetup and all the meetups in the future are a tribute to the community we built online. It's not easy to build these communities. It's very rare to kind of capture that lightning in a bottle and really make it special. And from the emails I've gotten from everyone signing up to Miami, I think a lot of people are very, very excited. And so should be a fun way to end out August. And then we get into the latter half of the year. All right. Also, let me just, I've like literally not answered anyone comments about this because it happened like in the past 24 hours. Yeah, thank you for 90K. We got 90K on YouTube. 100K hopefully is on the way. It'll be cool. I think YouTube sends you like a button when you get 100K. So that'll be pretty cool. We were at 0 in 2021. So it's basically end of 2021, November is when we started. So, you know, again, for me, I'm not a big numbers guy when it comes to metrics. I think a lot of it is vanity metrics and like 100K here, 100K. Like it is just a byproduct of showing that what you're doing is working. That's all it is. But it's not like oh my God, 100,000. It's like, no, like, you know, a lot of those subscribers might not even see your videos anymore. Maybe people subscribed years ago. They don't care anymore. What matters to me is the live audience that joins every day, the engagement from the chat, and then qualitatively how much you guys care about the content. And, you know, the subscriber growth is just a proxy for knowing that people want to consume the content. People are watching the content. The algo's recommending the content because people are clicking on it. They're watching it. They're engaged. And that stuff really matters as well. Dude, we need this rant intro because when did I say like, has it been 20 minutes? This is like, it's like in my soul. I can't end the stream in a proper way without ranting about something. It's also Friday, so I'm not going to see you guys for another 48 hours. So I guess there's like separation anxiety. So, you know, that's why, dude, I saw this TikTok yesterday of a dog who like legit has separation anxiety from their owner. And like the owner would like go to the kitchen and the dog would like go with them to the kitchen. Like it was the cutest thing ever, but you felt sad about the dog because when the owner goes to work, the dog is like so sad all day. And so that's me without the chat. That's basically me without the chat. Yes, we will have Palantir Weekly. We'll have Palantir Weekly 11 p.m. Eastern tonight as well. All right, that's it. Thank you, everybody. Appreciate it. I'll see you guys on the weekly tonight. And if not, then Sunday futures. We'll be back and we'll get ready for next week. Thank you, everybody. Love you all. Appreciate you all. See you guys later tonight. Bye, everyone.